questions that what people describe this as a Sputnik moment. So let's just start there. Is it a Sputnik moment, and were you buying or selling yesterday?
Well, whether it's a Sputnik moment or not depends on, how the accuracy of the claims. And, I know you discussed that on the program, and I think that's the first place to start. And what, shocked people so much, and again, this news just didn't break over the weekend, it's been out for a while, is that they were able to provide, so much more efficiency in training as compared to OpenAI and everybody else that's doing it, and how are they able to do it in such a short span. Again, DeepSeek couldn't have access to large clusters of NVIDIA's most advanced chips. So necessity is the mother of invention. But the question is, is everything in the white paper, 100% accurate? And, given the magnitude of the moves yesterday, that's a really important place to start.
Well, but Crystal, let's go there, because I'll give you my perspective. I'm not sure it has to be 100% accurate. Meaning, I think there could be. It may be that they trained off of 50,000 of NVIDIA's fastest chips, as Alex Wang said on our broadcast last week. It is possible that they are using and leveraging Llama and other open source services. It's possible, by the way, that they're scraping and leveraging things even like OpenAI and other sort of closed frontier. Maybe they're doing all of these things to get to this point. But I think the point is that they got to this point, and they got to it clearly with less energy than everybody else did. And ostensibly, for those who actually have now read through the code and understand it, they would tell you that you can start to build off of this in a much more efficient way than you could before.
Right. And that's an important point going forward. And really the question here is is the world going to need as much compute going forward as we thought a week ago? And at the very least, when you look at the announcements over the last week, SoftBank and such, $500 billion, the Meta comments, upwards of 60 billion or so. The big AI players in the U.S. are still planning on spending right now, and I don't get a sense that they're reassessing that just today. But that's the question going forward.
So you think that's interesting. So you think if there was a meeting yesterday inside of Microsoft, inside of a Google, inside you name the company, and they said our spending plans, again, what is that conversation? Is that conversation not that they're and by the way, it's not clear to me that they have to basically say we're not spending $80 billion tomorrow, right? That we've already signed that. I think the question is more. In their planning meeting in 2026 and 27, are they planning to spend another $80 billion in 29 and 30 and 31 the same way, right? That becomes the fundamental question. Right.
And at least what you could say thus far, and I wasn't party to any of those meetings they had, if they had meetings yesterday, it's a bit of a space race, right? So, what one of the things NVIDIA said for a while is that, nobody wants to be, the second model that comes out. That there's a big question about, time to market. The reason why OpenAI is in the position where it is because ChatGPT came on the scene before anybody else, and it was pretty good. And you go from there. We're now in reasoning models, right? So that's kind of the next frontier, and moving the ball forward on that is really important. I still get the sense, and I think that's probably over the next 1 or 2 years, that each one of these large companies is still going to want to be on the forefront. Mm-hmm. If you figure out a way to do it more cheaply, well, of course you're going to do that, and so that goes without saying. But I still don't think, given the stakes in AI, that anybody is going to want to slow down and say, you know what, I can save myself a ton of money and I can be number 3 in the market. That doesn't seem to be where people's
I hear you. I just don't know if it's an order of magnitude. We got to go, but I just don't know enough about whether it's orders of magnitude less, meaning it's not just I want to spend less money. It's that I don't even have to spend as much money and I can get the same output or even better, right?
Tuesday saw an almost 9% increase in NVIDIA stock as the AI chipmaker started to bounce back after a sharp drop the day before that had reduced its market value by about $600 billion. Investor concerns about a new, affordable artificial intelligence model from the Chinese startup DeepSeek were the cause of NVIDIA's 17% decline on Monday. Some Wall Street analysts were concerned that U.S. companies were overspending on AI infrastructure, since DeepSeek claimed to have spent less money training its most recent AI models, partly because it used less AI processors. The investment world became concerned that the market for semiconductors might decline and that NVIDIA's exorbitant GPU, graphics processing unit, or AI chip prices might be under pressure. The biggest one-day loss in stock market history occurred when NVIDIA's market value dropped by $589 billion. The tech-heavy Nasdaq fell 3% as a result of the DeepSeek revelations, which hurt not just NVIDIA, but the market as a whole. On Monday, chip stocks fell generally, although certain names started to rise again. Broadcom increased 2.6% on Tuesday after plunging more than 17% at the beginning of the week. In a statement released on Monday, NVIDIA described R1 as an outstanding AI development and showed little concern over the DeepSeek craze. Wall Street analysts remain skeptical of DeepSeek's purportedly cheap training expenses for its AI models and the ramifications for AI stocks as they continued to consider Tuesday's DeepSeek-driven market meltdown. Investors were informed by JP Morgan analyst Harlan Sur and Citi analyst Christopher Danley that DeepSeek's low spending, less than $6 billion to train its latest V3 model, did not fully cover its costs because it relied on Meta's open-source Llama AI model to develop its model through a process known as distillation. Before making any judgments, we think it is essential to confirm these expenses, Sur wrote. Danley stated, "We lean towards the argument of continued strong growth in AI spending, given that DeepSeek is based on leveraging cloud service providers. Meta and AI is still in its infancy." Nevertheless, DeepSeek managed to create a model that seems to be very competitive, despite obviously having less access to computing power than U.S. hyperscalers. Analyst Srini Pajuri of Raymond James sent a note to investors on Monday. So what implications does this have for NVIDIA stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Dropped by 3%, fueled by China's AI startup DeepSeek. NVIDIA shares rebounding a bit this morning after wiping out almost $600 billion in market cap yesterday. Of course, that is the biggest one-day market cap loss in U.S. history, although the rotation, Jim, was to some areas of tech, too.
Yes, indeed. And remember, the second worst was also NVIDIA during the watch party period. The stock is up. What I would say is there'll be heat-seeking missiles coming after that stock up. And if you really want to buy it, wait till they send it down $2-3, because that's been the usual practice here. Look, it's no doubt about it that people just say they're the blast zone. I like Semblus. I go to Semblus a lot from JP Morgan, and he's saying, listen, before you just write this off, remember that there are real winners. There's winners and losers, and he's saying that Amazon's a winner. They benefit high quality. They can Amazon, Apple, Meta, and some lesser extent Google winners. But NVIDIA, we point out, is at David one of the shoot first ask questions later. The PE based on forward earnings expectations declined toward the very low end of the range. And I was watching last night a great video after CES with a chart. You know, it's on YouTube, huge. And I just thought, you know what? We're now thinking. We went from thinking it's great to thinking there's really no use to it. But I keep coming back to the next generation is about robots, and it's about self-driving. It's not about ask ChatGPT where it might hallucinate or not.
Right.
Come on, let's get serious here.
Right. Well, I don't think that anybody is still. I don't really think there's a great deal of questioning as to the long-term impact of AI, Jim.
Okay. Right. Okay.
What we had yesterday, of course, was a question as to whether or not there are going to be ways to do it more cheaply, that is going to require less compute and therefore less power, perhaps.
Right.
And even though it was a broad sell-off in some ways, it was very distinctive in terms of it was NVIDIA, it was Broadcom, it was anybody really in the data center and or providing power to the data center. But and the fact is, Microsoft did not sell off that much. Alphabet did not sell off that much. Amazon. I mean, and
they're potential winners.
Right now, Alphabet, I don't know. You know, maybe
it's
not
a
as much.
tough
you know, if you, I mean,
search could hurt
this
them.
distillation that's happening. In other words, that how they DeepSeek distilled from OpenAI and what that means in terms of the commoditization overall of all of these models.
Right.
You know, I do wonder, for example, if OpenAI was trading as a public company, which it may at some point. What would have happened to it yesterday?
I know. And how much did this outfit to DeepSeek
dramatically
steal from OpenAI?
They may have.
I have Benioff on tonight to talk specifically about how that is.
Following a painful sell-off this week due to China's low-cost DeepSeek AI tool, semiconductor stocks in the US and Europe spiked higher on Wednesday, spearheading a recovery in companies connected to artificial intelligence. When ASML, a Dutch-listed firm that manufactures tools to create computing chips, including those used in AI applications, reported a shockingly significant gain in new bookings, European technology equities surged, driven in part by an almost 10% surge in ASML shares. After closing up 8.9% on Tuesday, shares of NVIDIA, which owns 80% of the AI chip market, were slightly higher at $129.77. The stock was still well behind the record high of $153.13 on January 7th, and the close of $142.62 on Friday. AI-linked stocks were hammered on Monday, taking billions of dollars in market value off NVIDIA and other tech companies. This was due to the introduction of DeepSeek's suite of AI tools as potential competitors, not only to incumbents like OpenAI's ChatGPT, but also as an indication that development costs may be falling quickly. Monday's 17% decline in NVIDIA's market value cost the business about $600 billion. The worst one-day decline in market capitalization for any corporation in history. NVIDIA is not an isolated entity. Ultimately, NVIDIA has a market capitalization of almost $10 trillion from its linked businesses, including suppliers, nuclear enterprises, and industrial equipment companies. According to Jacques Aurélien Marcereau, co-head of equities at Edmond de Rothschild Asset Management, it's a galaxy rather than simply one firm. Last week, DeepSeek released a free AI assistant that swiftly surpassed OpenAI's ChatGPT on the US App Store. The price and functionality of the company's AI products appeared to disprove the industry's perception that China was years behind its American competitors in the AI race. As investors turned their attention to the impending earnings from a number of the so-called Magnificent Seven US megacaps, among which are NVIDIA, Apple, and Microsoft, markets became more calm by Wednesday. Although there are still many unsolved uncertainties, Chris Weston, a strategist at Pepperstone, stated that the market is thinking that DeepSeek's potential innovation would not likely affect the AI capital expenditure cycle and may even create a new demand channel for GPUs, graphics processing units. According to a Tuesday Bloomberg News story, Microsoft and OpenAI, which is led by Sam Altman, are investigating if data output from the ChatGPT maker's technology was misused by a group connected to DeepSeek. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Breakout calling into question the tens of billions of dollars big tech companies have coughed up for AI development. The move lower also raising eyebrows around the valuations of these tech leaders. Joining us now, Deepwater Asset Management, Gene Munster. Gene, I suppose the best way to ask you whether you think this is an opportunity or sort of sign of a greater risk here is to simply ask you, are you picking up more NVIDIA at this point?
Deepwater does own NVIDIA. I can't say how we're trading it in the near term, but I can say we do own NVIDIA. And Deirdre, I think at the fundamental question there is the near term and then there is the long term. And I just want to highlight one dynamic around the near term is that the innovation around DeepSeek is real. And even if you think that they're embellishing some of the cost piece around that, that innovation piece is real. But there's a much bigger question that needs to be asked is not about what the cost to train the previous models were, but to get to that incremental step forward closer to artificial general intelligence. Does DeepSeek have some sort of a formula to do that in a cost-effective way? And my sense is that they will not be able to do that. So I think that the spending piece is on track. The reason why I mentioned there's the near term around how these are trading versus kind of, let's say, the near term over the next few days, actually, is that all eyes are centered on tomorrow night with Microsoft, with Meta, Tesla's comments about the hyperscalers. And most investors believe, consensus is that they're going to have some sort of reassuring comments that the market's going to be just, that the AI trade, the hardware trade, the CapEx spending is intact. And when that becomes consensus, if that doesn't yield kind of a rebound in some of these stocks, I think you could see a little bit of a near-term sell-off. If you're curious, typically when you have these shocks in the system, looking back to the run from 95 to 2000, it's about 30 days it takes from that initial shock that we saw yesterday to when things actually bottom, which puts us right in sync with when NVIDIA is going to be reporting their quarter.
I mean, you own NVIDIA. Steph's got a move that I'm going to get to after this because it plays right into what we're talking about here. But how are you assessing the damage here? Morgan Stanley today cuts the price targets of a number of semi stocks, including NVIDIA and Broadcom and Marvell and Micron. NVIDIA goes to 152 from 166, whereas Baird today says they'd be buyers of NVIDIA on this dip.
So 152, just to use that number on NVIDIA, would still be a nice 20% rise from here, which would indicate that you should not sell all your NVIDIA. What you should do, though, is evaluate risk. And I watched the show yesterday. Obviously, I'm here today. We are all talking about risk management. And for the last 2 days, I've been talking to a lot of portfolio managers within Cerity Partners, outside of Cerity Partners. There are very few. In fact, I don't think there's anybody who said that now is the time to back up the truck on AI. By the same token, nobody is saying sell all these names outright. That's not the conversation. The idea that these are bust in some sort of post-1999 way is not what people are talking about. Now, maybe that's wrong, but we'll find out. What people are talking about, and by people, I'm referring to professional portfolio managers, is this. Did we go into the end of last week with simply too much risk? Were we too blasé? Consider Oracle for a second, one of the stocks that's in the headlines the last 2 days. It shot up like a moon rocket last week on Project Stargate, and now it's given that all back. You have to be comfortable with the level of risk that you have. Now, what I'm saying to you, just to be explicit, is most people that I'm talking to are talking about trimming risk. What I'm doing in light of that is I'm waiting because we are going to get more information as the week goes on. I don't want to get ahead of where we are in today's rundown, but I will say we've got earnings coming up from two of the major hyperscalers, Microsoft, Meta. Let's see what they have to say. There are going to be questions about DeepSeek on those conference calls. I will wait for that information, but I think this is a time for everybody to say, not should we sell these all outright, but did we have too much risk?
NVIDIA is at the highs of the day. You know, as we're sitting here talking, and Josh makes the case that, you know, some of this might be overdone to at least some degree. It's trying to get 5% back of yesterday's.
The introduction of an artificial intelligence model by DeepSeek caused a major tech sell-off in shares worldwide on Monday. However, several of the worst-hit stocks recovered on Tuesday. Analysts and investors are now sharing their opinions and theories about what happened, and more importantly for future events, whether the initial reaction was correct or incorrect. This is because there hasn't been much time for introspection and reevaluating since the initial shock, which saw AI chipmaker NVIDIA in particular initially drop 17%. Monday's decline in NVIDIA's stock price was the worst one-day decline in Wall Street market value history, amounting to around $589 billion. To recoup some of those losses, the same company saw a 9% increase a day later. For further context, considering this week's decline, NVIDIA shares are still up 14% over the last 6 months and 111% over the last year after a sharp increase from March to July. What about the first sell-off then? Experts in the subject say that a lot of it is caused by ignorance or false information. According to the FT, billionaire hedge fund manager Steve Cohen stated that there would be times when people will question it, such as when many stockholders may not understand what they own or why they possess it. One fund, which has raised about $1.5 billion, $1.2 billion, is included in Cohen's .72 hedge fund and focuses mostly on assets linked to artificial intelligence. There are a lot of people out there who haven't done the work, and they can misinform investors and the public, and we saw a little of that yesterday, he continued while speaking at the Global Alts Conference. Bank of America global investment strategist Elias Galou was more direct. According to the FT, they claimed that Monday's events were an extreme response that was exacerbated by extreme positioning. Cohen went on to say that he thought the overall climate was favorable for AI investment and application since it facilitates the transition to artificial superintelligence. Similar suggestions were made by Microsoft CEO Satya Nadella, who stated that the use of AI will skyrocket as it becomes more efficient and accessible. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
I got to ask you about NVIDIA. Let's wrap it up with that.
Yeah, we gotta. I wish I came on the show at 9 o'clock. The setup for traders, especially the traders watching this, you watch that 200-day moving average. It's the first time it broke below it since December of 2023, maybe October 2023. It's been a while. We finally eclipsed it. Every buy stop in the world was set to 122. As soon as it hit 122, it was off to the races. So your risk reward, it was set up for a nice rebound trade. And long term, I still think it's great. This story out of China with DeepSeek, we shot first. We're asking questions now, and the answers we're getting. Kyle Bass was on your show. He doesn't trust it, and I have more questions than answers. So I think this was a buying opportunity, just like August 5th with the Japan yen carry trade. Remember that? Yep. We sold off a ridiculous amount. We got an opportunity to buy, and if it does fail the 200-day, you get out.
We're going to wrap it there. Jay Woods, thank you.
You have as much confidence today in NVIDIA as you did last week in their ability to beat and then continue to, if not raise their guidance to the degree they had in the past, because most think that that's not possible anyway, but enough to justify the excitement and the move in those shares?
Well, yes, I do. I mean, we've been doing a lot of research on this, and one of the things to understand is that, training consumes a lot of computing power, but inference, especially at the edge, i.e., when you use you do something on your iPhone that requires any kind of agent AI, any kind of AI function, that inferencing function could be multiples of compute power needed. The interesting result, DeepSeek is run on NVIDIA chips. It's just run on last generation NVIDIA chips versus, say, upcoming generations or highest end. Blackwell is coming from NVIDIA. We think there'll be plenty of people pursuing both ends of the AI spectrum, right? There'll be some still pursuing the absolute high-end cutting edge. Think about internet search. There was Yahoo. Then there was Google. But in between, there were Ask Jeeves, Alta Vista, Bing has been around. That battle to be the ultimate dominant AI model is going to continue for a while still. And at the same time, with the lower cost, a lot of more pragmatic, practical applications can be possible, particularly through software and hardware.
Meanwhile, people attempting to predict the specific winners of the AI arms race may not fully comprehend the ramifications of new rivals, brand names, and process modifications. According to Thomas Spencer, an energy and AI specialist at the International Energy Agency, IEA, this sudden response shows that the market does not yet have the necessary resources and knowledge to evaluate the forecast for AI-driven electricity demand. Chip makers and AI model developers were not the only industry impacted by DeepSeek's claim that their model was more effective and used less energy to process requests. As the new technology advances and is made more efficient in a variety of ways, it is obvious that there will be more changes in the future, not only in terms of share price but also in terms of which countries are at the forefront and who the major players emerge as. However, it isn't having a lasting effect on the stock market just yet. Russ Mould, investment director at AJ Bell, clarified that while DeepSeek's entry into the market may have changed the narrative surrounding tech companies, it hasn't been the reason of a prolonged market sell-off. According to Mould, U.S. markets recovered yesterday and appear likely to continue on the same trajectory today, ahead of two significant events. These include the U.S. interest rate decision and the beginning of the Magnificent Seven's earnings season, which will see updates from Microsoft, Tesla, and Meta.